चलो start today. Valuation. How practically the business, then from they will make happening constant at the end. Can I have to value all liabilities, have some at the end here, then this becomes your asset. Purchase, selling. So this is happening throughout the year. Happens throughout the year. At the end of the year, at the end of the year, the business has some unsold, and on 31st, value of liabilities, this unsold stock, what is remaining at the end of becomes our asset. This asset as closing stock is what we have to value. And how to value our, first of all, why should you value your, because one, closing stock appears trading, you start with open, then you write purchase, right, closing or balancing, correct? Have to closing. Can I value wrongly, then the profit will get affected. The GP, bring down the GP in PL, net profit will also be wrong. Balance sheet will also be wrong. That is why closing valued. Am I clear? Second, this closing balance sheet, because if you don't show it, assets and liabilities is also not there correct. So you should correctly. How will valuation affect the profit? Let's say for openings, then you further purchase, sold at 1/3. Let's say you valued your closing stock at 40. Right? Now what if wrong? Made it valued at 6. So how much will 110? Can I plus also in matlab closing stock and profit are directly also include, then can I opening are firstly proportional. Firstly proportional, this increase is, am I clear? Okay. So one, I told about the year constant purchase, and from these purchases at the end of, I have to value all my assets and liability, and this, because of constant, whatever remains my sold stock, this stock is my as closing. Here till here, value. First what the business purchase किया, sell किया, and whatever remains is your unsold stock. So first you find how many are there. First you find how many are there. Then you multiply with amount per unit. So let's say you have 10 units. Then you multiply with amount per unit. Price of per unit 7 rupees. Then your closing stock 10, 7. How will you do? First you will calculate number of units. Try it with rate per unit. One unit का कितना amount है? That will give you your clear till here. Tell me. Calculate. How many units? You are there. Count it. No. You are telling me count it. Am I clear? Yes. Well, in what you have to count. Can I count? You have to close down the business and do the counting, right? That is called as physical. This is possible. If the small, what if the business is very, very huge? Take a lot of time. That case, what we should do? That case, follow another method. Perpetual inventory system. In perpetual, you maintain every time you record, every time you sell the goods, you record. मतलब number of unit wise. Guys, how many units? How many vendors? Then base every day. Then have the amount of closing stock daily basis, correct? Perpetual and the physical inventory and perpetual inventory. What is physical? Count of the end of as physical inventory. So logically tell me which inventory is more applicable for small business, for big business. Now since you are under one more step. Check. Say you have showed 1,000 units. Check if find out whether there is theft or misplacement or any damage. But can you do this here? No, because you are only counting. There is no record maintenance. Here. I clear it. I'll give you one. Let's say the business of saris. Saris may also have multiple types. Polyester sari, silk sari, cotton sari, sari. So for everything you will have different columns. So as of one day, that printed saris are 20. They are there or not. Some background checking can happen. But that here it cannot happen. I clear? Cannot happen. Happen only with perpetual inventory. To understand the difference. Second, how to calculate amount. How to calculate per unit. This is given by account. Actually, valuation by accounting. Accounting inventory valued at net realizable whatever is inventory valued at cost or net realizable value, whichever is less. As you remember, last we did capital, all expenditure asset is working condition added to the cost of a all cost, but the inventory available condition recorded. Let's say for example, let's say we are the manufacturer shirt. How will you manufacture? First you will bring cloth. What you will do? Sell the cloth. First you will cut it into size. Correct? Then use the buttons, collar, iron it, pack it, label it. So many costs will increase, right? Now tell me, without label, can I sell? Then that labeling should be part of the cost. Okay? Without ironing, can I sell a crumbled shirt? Nobody will buy. Correct? That ironing cost will be a part of the. Okay? Without cutting the shirt and stitching it. Joke, ma'am. Correct? No? All the costs which are necessary for you available condition, then it should be added to the cost of us. This cost में क्या क्या लिखा? What and all are included? Purchase price. And what is purchase price? The cost of raw material, right? The cost of buttons, cost of packing material, purchase price. Then conversion. Conversion cost to finish. जैसे cutting, button लगाना, by then packing, all that. Okay? Any other directly attributable cost, like for example, transportation. Transportation. Here till did you? Then what is net realizable? Net realizable value is net realizable. Net. How much you can realize value. Net from this inventory, how much you can, for example, at the end of the year, have 5 shirts that are cut. Okay. Now we have to find its net realizable value. The formula for realizable estimated selling price. What is the estimated selling price of these shirts when it is finished? Shirt, can you sell those shirts cut? No. That's why it is called as WIP. So estimated selling price when it is completed minus estimated cost of completion. What is cost of completion? After completion, stitching, packing, button, everything, minus estimated and selling like transportation, any commission to pay. This will give you net realizable value. Am I clear? Repeat. Tell me. Valued at lower of cost or net realizable value. What is cost? Purchase price plus conversion cost plus any directly attributable cost. What is NRV? Selling price minus cost of completion minus selling expenses minus any. वापस बोलो. What is it? How to value your amount? Sorry, it's valued at cost or NRV, whichever is value cost. Purchase price plus conversion cost and any other directly attributable cost. That will be your M. How to calculate NRV? Estimated selling price minus cost of selling can be of multiple types. Let's say for example, what does a trader do? Buy goods and sell goods. Can I say I have only? But what about a manufacturer? They have raw material, WIP also, and finish packing material also, and packing material also. All of these have to value. And how will you value in? First find the number of units, then find the amount per unit, and that will be your closing stock. How to find number of units? Base, either physical inventory system or perpetual inventory, also called as periodic. Okay. What is actual counting? Correct. So can I say requires closure of business very less expensive? Do you think will be expensive or perpetual? Perpetual, because on daily basis you have to do the recording. Am I clear? How will you find the amount? How will you find rate per unit? Lower of cost or NRV. Purchase price plus conversion cost plus other directly attributable cost. And how will you find NRV? Net selling price minus cost of completion minus I told you these costs have to include everything that will help the scalable condition. Let's say for cutting, stitching, iron, button, so many things. Specifically, core cost should not be included. This not be included. Let's say for example, any administration, let's say employee salary, all this add to the total here. Second, storage cost, the place where you store, warehouse, go down. This is if storage is necessary or bring the available condition, then storage cost added to the cost of inventory. But if storage is not necessary, let's say I'll give you one very famous, no? Had those really melts in your. Now tell me, those cookies, would you like to eat fresh from or no? Let it be there for 4-5 months. Then I will have fresh. In this case, is storage necessary? No. Then that storage cost, you will have some kind of storage. That should go to P&L. Are you understanding? That should go to P&L. One more example. Wine. How is wine made? Grapes. So if you have a grape, make it pure. Then what? You have to store it for 1 day. Years together. Correct? Can I for the some of wine? Storage is necessary. Like, can you avoid the storage? No. Then in that case, cost should be added to the cost of inventory. Understanding the difference? Storage is necessary. The inventory available condition. That wine bottle only 17 years old, 21 years old. That's what they say. The older, the better is the better the kick. I don't know. The old batch students. I don't. Correct, no. So can I? Storage is very much necessary. then you should add it to the cost of inventory. Not necessarily like our cookie. Also, I'll give you one. I don't know. Let's say these Tazo pans, they are very much. So when manufacture Tazo pan, like to store it for 5-6 years, then we will sell. So then storage is not necessary. If you are storing it, then it should be. If you have storage charges, then it should be going to P&L. But when the storage is necessary, add it to the of. I clearly to understand the if. What does the if mean? If it is necessary, then add to the cost of inventory. If it is not necessary, charge it to. Am I clear? Third one, selling and selling and advertisement, the radio, all those are not necessary. No, product is enough. Then it should charge to abnormal. Told you, you need raw material. फिर cut करो. Have worker also, no? Worker you have to pay salary. No? Yes. That wages is a part of your inventory. Correct? Abnormal item. Let's say let's say some of your inventory, fire happened. So fire is normal or abnormal? Abnormal. Fire is then it should charge to add it to the cost of. Otherwise, these workers, they have gone on a strike. And let's say you have to pay them for the strike. When they are on strike, you still have to pay them their salary. Then, and I'm not getting that salary for me will be kind of an loss. Not added to the cost of their salary will be added to the cost of inventory only. But in this case, when they have gone on strike, that part. What did I say? 4 costs that should not be a part of it. What are they? Cost, storage cost, selling and item. Am I clear till? Sorry. So to do depreciation, 6 methods are 6 methods are the same. Find cost. There are multiple methods. First, you have to check how to find the cost. Whether entry, ordinary, changeable, or ordinary not. What does this mean? Entry ordinarily change. Went to buy Oreo biscuit. Favorite flavor? Vanilla. There are 2 packets of vanilla biscuit, vanilla flavor Oreo biscuit. Whichever you pick, will it? Whatever you pick, both are same only. Then this ordinarily changeable. Second situation, you went to buy a mobile phone. You have 3 brands. Pick any? No. Matters. Correct? Then this is ordinarily not changeable. Am I clear? Do you understand? Went to buy a chocolate. Whichever you pick, both are silk only. How does it matter? Correct? Then this is inventory ordinarily changeable. If it is inventory ordinary not change, then you have to go identify method. Okay, now how to follow? What did I give you an example? Mobile phone. Now, let's say at the egg, valuing with rate per unit or amount per total amount. Number of units. We'll write down. So I have Galaxy 1. We'll write down each how many units you have. Then you will multiply with cost. Let's say for brand is tell me is this have different, we have two. Then Apple, there is the latest Sana Kobe, itna. Then each ka cost, right? Specific identification, so specific count, how many are there, find each ka cost and then the value, right? Then you talk about inventory ordinary changeable. Inventory ordinary, two methods. The historic cost method or non-historic cost. What is historic cost? What is historic cost? We have four options. There you can go average, weighted average. For mean, inventory which came first will go out first. For mean, inventory which came in latest will go out. I'll give you one. Early lame, but you'll understand. Never gone vegetable gone. Never. Sometimes. Let's say there is a vegetable has tomato. Okay. Now he has some tomatoes. He has some tomatoes, some days old, and he has some other tomatoes bought in today morning. Now, when you go for buying the, from which lot you would prefer to buy, which came in today morning, nice from red color, be good to eat, right? Entry came in last, going out first. Am I clear till here? Now, second situation, he has mangoes. Okay, he has mangoes which came in 10 days ago, and he has mangoes which came in today. When you go to buy mango, which lot would you prefer from 10 days ago? I told you, you should have gone vegetable this month. There is buying. Buy those green typed mangoes. That eventually, by the time he sell, it will ripe off. What he would have bought proper green, not even be. Are you understand? So when you buy, you would prefer from this lot because now they would have riped a little. Well, you get good taste. Well, you get good fragrance. Correct? No. You would what? Before in came in first, will go out. Right? This Iyengar bakery cook. Or LIFO. LIFO. It came in, say, I wanted first. I don't know. Is when you go to buy these the breads, the one which is dated today, manufactured today, you bring that only. My mother is very particular. Breads, yes, milk also, yes, exactly, yes. Always eat what is manufactured today on the can I say? Do you understand what is FIFO? What is LIFO? What is FIFO? Inventory which came in first will go out first. And what is LIFO? Latest is going out, right? Simple average method is very simple. What it says, there are some 4-5 prices. Take a simple average and value it at number of unit count, rate per unit. Correct? No. Trying to calculate rate per unit. Count either physical or perpetual inventory have done, and then you would have number of, correct. Now we are per unit. How to find the rate? Or you use simple average. मतलब you have 4-5 rates, average like 8. Or you do weighted average method. Average मतलब each purchase and sale some weight. Exactly directly with the help of a question. Otherwise, you'll get very. But did you understand the overall basis? Last one, on history. Under non-historical. Selling price. Adjust. How do we do? The value of question. Why are we learning all this? Find the value of closing stock. In the question only they are giving you value of closing stock. But closing stock is always valued at cost price. So from selling price, how will you arrive at cost? You are the selling. You want to arrive at cost price. Very good. So what you will do? Selling price minus profit percentage. That will closing at cost price. Right? Tell me, that is so conversion. Profit, the total profit that you have earned divided by total sales, 200. The total profit that you have throughout the year divided by total sales throughout the year will give you profit percent. Correct? How to find? Whatever is the purchase, whatever is the total minus the purchase that you made during the year, cost price. This I am talking in total. Total sales, total purchases, profit, total profit that you have earned, total profit divided by sales with profit percentage, and profit percentage defined. Full. So how much total? Price? Let's just revise one. Now tell me, when should you acha? Entry. Entry is covered by which accounting? AS2. Accounting standard 2 talks about valuation of. Now tell me, when should you value your? When? At the end of the year. So at the year end, value your. How should you value your? Oh, कैसे करोगे value of? That is how to find the rate, value of number of units multiplied by rate per unit. Give you closing total. Correct? How will you find number of units? Two methods. Or perpetual inventory. What is physical? Physically counting. Close the business, less expense. What is perpetual inventory? Keeping a record of the books on daily basis. So can I say if I'm doing a record on daily, if there is any theft or misplacement, you can find out. That's not possible under physical inventory. Then how to find the rate? Cost or net realizable value, whichever is less. How to find the cost? Purchase price plus cost of conversion plus other directly attributable cost. How to find NRV? Estimated selling price minus estimated cost of minus estimated selling. They will give you till here. To find the cost, you have multiple methods given. Achha, sorry, before that, this cost, four things are not included. What are they? Administration cost, storage cost. If storage is necessary, then you should include. Storage is not necessary, don't include. Fine. Selling and distribution and any abnormal item. All these four should go to P&L, not to be added to the cost of. To find cost, multiple methods are given. How do you do? First, you should check whether ordinarily or not. Ordinary method. Either you buy this or you buy that, it doesn't matter. But ordinarily not changeable, it makes a difference. If it is not changeable, then what do you do? How do you value your inventory? Specific identification. You find each how mobile you have, multiply with the cost. But if inventory is ordinarily changeable, then you have historic cost and under historic cost, so average, weighted average. Overvalued. Profit will openings more. Sorry, less. Right? Let's go. Apart from last, guys, have you gone through? Guys, done. Last part to this. Last part. Guys, you took this in valued on. When should you value it? Year end. It is 31st. So is it practically possible that you are always available on 31st value, and sometimes know in advance that you are not going to be available, it, or sometimes you do it after, right? Let's say we did it before only on 20th of March, and that time we got a value of inventory 7 lakhs. Tell me, between 25th March and 31st March, there will be transactions, correct? Now thinking on 30th March, should I value at same 7 lakhs? We should change. So can I say whatever transactions, those should be adjusted, like for it. Between I have made purchases. So the units or the inventory value will increase or decrease. So add, there is purchase minus, there is sales less, there is sales return. Understand, right? Are you sure? Guys, one more thing you tell me. Purchases are always recorded at cost price or selling price? Cost price. Good. Purchase returns, cost price. Sales, selling price. Returns. This inventory that you would have been valued at cost or selling price? Cost, right? Inventory always at cost price. This is at cost price. You are adding at cost price, no problem. You are minusing at cost price, no problem. And selling price. From selling price, how will you change cost price? You are selling price, how will you arrive at cost price? Minus the profit. Very good. Selling price minus the profit percentage. So be hai. That will give you cost of sales. Right? This will also be at selling price. So what will you do? Minus the profit will give you cost of, very difficult. Next one. If it is done after, now guys, it will be a mirror image. Whatever you found, let's say you valued your inventory 7th of April. You valued the 4 lakhs. Right, 4 lakhs on 31st March. Whatever has happened between, must adjust it, right? So if you made purchases, minus. If you make purchase return, add. If you make sales, add what? Cost of sales. Very good. And if you have sales return, very easy. Very. You have written 1 to 10, right? Question number. Sureka Limited D products P, Q and R similar or interchangeable. Are not interchangeable. At the end, historical cost and NRV of closing items are given. So, find the value of closing. How will you do? P, how much is the cost? 38. NRV, 42. You will value it at cost. Q, lower of cost or NRV. Q, cost and NRV same only. Whichever you take doesn't matter. R, cost or NRV, whichever is lower. So, lower. Don't you think it's not even your level of question? But why is it in Total cost 970. Total NR 914. They will add this and this. They will compare cost or NR. Done product wise, not be done on total basis. Values inventory valuation is always done product wise, not on next one. Right? Already. Question number. Guys, good question. Question number 2. I have given one question for all 4 methods. LIFO. Guys, right? Have ordinarily not change. For not change specific identification के लिए कोई question नहीं. Because this is very strict. Like you have to just find how much inventory there, multiplied with amount. That's it. For inventory ordinarily, for simple average, weighted average, and adjusted selling price. For this, I've given one question. One question. All the 4 methods. A manufacturer has the of he uses while manufacturing. Okay. So please underline record of purchases. Underline record of purchase. Can you see some details of purchases are given? That is, on 4th December, purchase 900 units. 10th December, 400, 11, 99. So on 5 different dates, we have made some purchases, right? Record of each purchase or sale. Bracket if you want. We have issued for 520. How much did we actually? How much did we? Very difficult. Purchase 2006. We issued 1006. Closing stock must be 1000. Here till here. That 1000 is your number of units. Now we have to find rate per unit. Find our closing stock, right? Calculate the value of inventory as per FIFO, average and weight. First one I will pay attention. First I will. FIFO means first in, first out. Entry which first will go out. Tell me. Closing stock 1000 units. From the oldest or the latest to FIFO means first in, first out. First will go out first. Inventory which came in first will go out first. Closing stock will be from. This. You first purchased, then you purchased 200, then you purchased 150. Okay. Now the closing stock is of 50. Tell me these 50 be from 100 or 150. Purchased first, second. Let's say I want to issue 400 units. FIFO, I'm following FIFO. First will go out, second will go out, third one you will use 100. How much will remain? Remaining from where? Oldest ke latest. When you are answering, you are telling oldest. Okay. So once more, if I have a closing stock of 50 units, tell me be from the oldest or the latest stock. Latest. Sir, FIFO. Am I clear? In our case, how many have closing stock? 1,000 units, right? These 1,000 units will be from December 4th or December 28th, 19th, and so can I say these will come from December 19th and December 28th wale units. For 19th purchase 200 at 800 at 47. Hundred units that you have, no? Am I clear till here? I didn't write this work only. Done. What is the second method? Calculation. Well, 49,000, right? Now second method. So means last in, first out. So for this there is no, you have to follow full fledged method. How it should. Actually, get the same. For LIFO, for FIFO there is a shortcut, but for LIFO you have to do this. Nine columns, right? 10. Done. First you tell, first what is the transaction? I have made purchase. Then both purchase matlab write it in the column. Much 900. Write the 900. Date, write 9 at 50. The balance now on the December 4th. Did you further purchase? No. So can I say balance will be 900? No further purchase, that will remain the balance. When is the next transaction? December 10th. 10th December. What are we doing? When is the next transaction? 5th December. What is happening on December? Sale or issue. How many are 500? Now can I, has to happen from, has to happen from 9, there is no other option, right? At 5,000. So balance, very good. Balance will be at 50. Right? Next, what is happening? 10th December, we are purchasing 400 at 55. 22. Right? Now tell me, on this date, no other purchase. So tell me, how much will be the balance? How much will be the quantity? Right. We already had 400. Then we further purchased 400. Guys, if I write total 800, can I one 400 ka price is another 400 ka price is separately. Have one 400, another 400 at 5. Right? Next is 11th of December. What is happening? Purchase 300 at 5. Now tell me, first we have 4,000. Then we have at 55, which is 2,000. And we have at 55, which is bond. Both. Both are 55. There's one more. What if? What if was 50? Then you can't merge this and this because it is purchased on different dates. If it was first situation, that was 59, this can't merge this 400. You can merge this the latest because they are doing method, right? You can't merge this the latest. You can't merge the older anyone. I clear till you? Next is 19th. What is happening? Then purchase 200 at so now all three prices are different, or we have to write all 400 at 7 at 55. Right? Next is when what is happening? How much? 600. Now tell me which are we doing? For means last in, first out. This 600. How will you issue? Where will you issue? First. Very good. First you will utilize 100 at 6. Correct? How much more do we need? 400. Where will it come from? 700. Very good. Tell me. First 400 will remain as it is. Out of this 700, how much did we utilize? 400. So in 50. Next, what is happening? December 28th, we are at 40. Now tell me, in closing stock, 400 at 50 as it is, at 55 as it is, and 800 at 46. Correct? Last one, December 29th. What is happening? How many units? 500. From where will it come? 47. 7. Very good. 500 will come from 47,000. Now tell me what will remain. Same 400 at 50, 100 at 5 will remain at 40. Can I say? The last transaction, right? Can I say these 3 units stock? All these 3 ka total put together, my value of closing stock. If you add 4 and 3, 1,000, and that's what was our closing stock unit. At the value, of units. Has to be very difficult. Let's go to the next one. Simple average method. Third method, simple average method. What did I tell you? Simple average is very simple. You have to tell me how. Now tell me how to value your close number of rate per unit. How many units you have in this 1,000? And how to calculate the rate? They have told you have 5 different prices: 50, 55, 55, 60, 47. Add all, divide average. Simple average. Best of all. Last one, weighted average method. For this also you have to draw start. First, what is happening? 4th December, we are purchasing 900 at 50, right? Okay, no other transaction, balance. Okay, next, December 5th December, what is happening? How many? 500. Option only has to come, right? Next, what is happening? 10th December, we are purchasing 400 at 55. Now paid. In weighted average method, whenever purchase is happening, that time rate will change. On terrace and write it there. Whenever weighted average method, weighted average method, whenever purchase, that time we have to find the that time the weighted. Okay. How to find the weight? Weight. How much total quantity we have? 800. How 800? 400 and 4. For these 800, how much money have we paid? That is per unit. I'm talking about total. 42,000 total cost. Right? 32.5. Did you understand what to do? How to do? This plus this. Divided, you'll get the balance. Okay, now next 7th. Again, we are purchasing at 55,500. Now tell me, purchase or issue, that time rate will change. How to do? 700. You have to tell me 8,500. How will you find the rate? Here till here. Next is 90. Again, we are purchasing 100 at 1,300. 60,000. Right? Next is, and here this. What is happening? 600 units. Where will it come from? The older one, right? At 50, balance will 700. At till here. Now next is 28. We are purchasing 100 at 47. 37,000. So tell me, rate will change. Find me the rate. Last 9th of 500 at in 1000 at again we got 1000 closing stock name. Now the value under average method is 50. I have done all the 4 methods. Now just that's all guys.